This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Let's move on to the post-game chart book. Listeners, you'll find the download link in your Research Roundup email. The topic this week, pause, correction, or crash. What's it going to be, Patrick? Pause, correction, or crash?
Well, let's get into the charts and let them do the talking. So I wanted to first just highlight on page 2 just the traditional S&P chart that shows how this market's been progressing. The one highlight I really want to make that is up until now, the rally has been very reminiscent of the July-August rally. We saw that more or less lasted 2 full months, and the market just kept crawling higher and higher until the correction kicked in. We are just about 40 or so days into this rise. So it is interesting that we're pausing a little bit right here, but it's one of these markets that at least for another week or two could arguably continue to advance higher. And to highlight that, if we go to page 3, what I did was to break this down to a 4-hour chart to kind of look at those intraday futures on the 24-hour charts. And what I wanted to just point out is that even though we had a big down day yesterday, that down day does not really look much different than all the pullbacks we have seen through November and December. These pullbacks that tend to last it's more like 48 hours to 72 hours, 2 to 3 days. After the market consolidates, it then just resumes. And at minimum, though, what we have to just identify is that the market hasn't yet done anything outright bearish that would have even signified a market top. So I just think it is a little premature to already be saying something more bearish. But there are certain things that are catching my attention that suggest that this may be closer to the 8th or 9th inning of this advance. And that's if you go to page 4. And CNN Fear Greed Index is something that a lot of people track as a very good gauge of market sentiment. And what I highlighted by overlaying the weekly chart of the S&P 500 going back to 2018 to present is that you can identify that those extreme readings of greed at the top or boundary do correspond with market peaks. And of course, extreme negative fear or negative sentiment often is associated with market bottoms. And with us having hit the 92 level on the Fear Greed Index just last week, we are at minimum, we have to identify that things have gotten very frothy. I mean, in the last 3 years, there was only one time, and that was back in January before the COVID-19 period, where we saw the reading go higher than where it is today. So while we may not necessarily have any signs that the market is already rolled over and breaking, we are at least seeing some extreme sentiment, which is suggesting that it's very frothy and mature in that cycle.
Yeah, Patrick, the way I see this is, it would be so easy to make the argument, look, these valuations, if you look at the CAPE index, there's so many ways to say this market's overvalued. Well, look, how many times has it been possible to make that argument in the last 5 days, only to have the market just laugh in your face and march on higher? I think it should be topping, but I don't think there's any reason to assume it is. This looks to me like just a little hiccup along the way. We got to see a lot more downside before there's reason to think the market is doing what I think is long since overdue, which is a substantial correction lower. In any event, Patrick, the divergence between the FAANG stocks and the Russell, which you have charted on page 5 here, is really pretty striking. And what I think is, to me at least, very interesting as I look at this chart, there's lots of things that diverged and kind of went on their own new pattern with the beginning of the COVID-19 crisis. There's lots of places you see that, but that's not the case here. We really saw pretty good correlation until really the end of October, and all of a sudden you see this outperformance on the Russell when the FAANG stocks are what was leading the whole market higher. So is this a sign that the FAANGs are no longer the big drivers of the rally that they were before?
Yeah, and you have to even look deeper than that, because when you break it down and look at the actual charts of Apple and Microsoft and Amazon and Netflix, like these stocks have just been dogging it for 3 months and simply have not participated whatsoever with the huge rally, which really was a substantial sector rotation as cyclicals really took over, and we've seen small caps working. We've talked about it a couple weeks ago in our chart deck, how global and international markets, both emerging and developed markets, have really started to as well participate on the upside. And this trend continues. And to further illustrate the idea that this rotation is fully underway, when we go to page 6, we have the momentum value ratio, which is basically showing the trend of that momentum has been the trade. And what I hear, even though I only have a year of chart here going back to the start of 2020, if you even look at a 3 or 4 year chart, momentum has been the trade for the last 3-4 years and has been a material outperformer. And really, once this peaked out in that September-October period, we've really seen that shift where many of the cyclical and value names have been outperforming that of momentum, which continues to actually get crushed on a relative basis. And so while we are seeing sentiment very frothy in the S&P 500, and while we see the markets holding up, it really is important for your performance to be allocated into the right parts of the market. Because if you were overweight these tech names, you might at some point start suffering some FOMO from not having the performance that the broader markets are delivering.
Patrick, let's move on to my own favorite topic, which is crude oil on page 7.
Right. And so I just wanted to make the technical observation that crude oil has pretty much been able to brush off almost any and every little correction. I mean, each of these little consolidations we see over the last couple of weeks are almost immediately bought. And crude oil has consistently held above its August highs. And irrespective of these inventory numbers, the price action remains very bullish in the way that it's being accumulated and bulled. And it's almost like you don't want to fight this until we see that they run out of buying momentum on this. Right now, with this kind of a breakout, I wouldn't be surprised if we touch toward $50 here on the next impulse. I think the bigger question will be, once we do kind of see crude oil find its little upper boundary, wherever that will be, will the first quarter of the year see a deep mean reversion where it consolidates? I'd love to hear more from like Art Berman and yourself on that in the coming weeks.
Well, Patrick, this is a very, very important moment, I think, in the crude oil market, because while there have been arguments for there to be some downside because of the COVID-19 situation escalating, if we get a geopolitical escalation that kind of gets us through to the point where we really are into the vaccine timeframe, then I think it's all up from here for the crude oil market. And that's definitely what the market seems to be anticipating. It's not just the front month, it's also the back of curve time spreads, which I follow very actively. My trades are performing extremely well there as well, so I'm happy about that. But I really think that if there's going to be a down event in the market because of the COVID crisis, it has to come fairly soon. And it seems like it's not going to come fairly soon because of what's going on with geopolitical tensions escalating. Now, of course, those geopolitical tensions can de-escalate as quickly as they escalated, so we'll see what happens. But I'm thinking more and more bullishly, and I'm continuing to add to my long position on the Z1, Z2 time spread. And finally, folks, don't forget, Patrick does webinars with great chart decks like this 4 days a week. You can check it out for free if you want to get a free trial at bigpicturetrading.com. Information is on page 8.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week, free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.